what's going on with the housing market. Stay tuned. Hi there, it's Shirley with Shirley's Real Estate Group, John L. Scott, and this is the BS Real Estate Show, buying and selling real estate, that is. I know it's been a while since I've done a video. I was moving and then I packed up the entire house and then I changed my mind and then I had to unpack the entire house and move back in. And of course that's a whole nother video all by itself. So I'm being asked over and over again, what's going on in the housing market? Are we in a bubble? Are we headed for a crash? Is the bottom going to fall out? And so I have some charts here that I wanted to share to help bring some insight as to what's going on and where we're at and where we're headed. And so to keep this video not too long, I'm going to jump right into it. So obviously interest rates are what's impacting our market the most, so we'll start there. This first graph goes over mortgage rates. This is Freddie Mac 30-year fix from January to the end of September. And obviously the last part of the graph, you can see where there was 6 straight consecutive increases on interest rates, and so that made headlines. So the first 2 graphs that we'll go over is going to be on that. And so with mortgage rates rising, it slows the pace of sales, which has created more inventory or more options in the housing market. And then this next graph, again, in conjunction with the first one, is a quote from the chief economist from Freddie Mac, and it says, "The uncertainty and volatility in the financial markets is heavily impacting mortgage rates. Our surveys indicate that the range of the weekly rate quotes for a 30-year fixed rate mortgage has more than doubled over the last year." Which is huge. We started in the 3s and now we're in the high 6s, low 7s. And so that's affected the affordability window for a lot of buyers. So that's taken a good chunk of our buyers out of the marketplace, which would be our demand. And so in anything, everything kind of boils down to supply and demand. So this next graph goes over the supply and demand ratio. And so you can see here that showings are down nationally by just over 12%, while active listings are up 27%. So again, we have a little less demand because of the rise of interest rates and a lot more inventory. And the next thing that affects the market heavily is, the news, the media. And so these are the different headlines that we're seeing is, mortgage rates near 7%. Mortgage rates reach the highest level since 2008. 30-year fixed rates jump over 7%. And then this next one is the big one. Ivy Zelman projects U.S. housing prices will fall 4% in 2023 and then another 5% decline in 2024. And so obviously, seeing stuff like that in the headlines puts a lot of uncertainty there on where we're headed with the market. And so hopefully these next graphs will help, bring some insight on what all of the experts are saying and not just what gets the media's attention. So this next graph here is the home price forecast for 2023. And you can see here that the average of all 6 forecasts is predicting that we're going to see a 1.8% increase in appreciation. So Fannie Mae, Freddie Mac, the metropolitan service areas like Zillow, the Home Price Appreciation Survey, and NAR are all predicting increases in appreciation. Where Zelman is, the one that's predicting that we're going to see a depreciation. So looking at this, we can, probably expect at least 2% appreciation, if not more, for 2023. So this next graph is breaking down the metropolitan service areas and what those experts are saying and predicting. And so you can see that the vast majority of the top experts and economists in the metropolitan service area are predicting that we're going to see appreciation, not depreciation. So 618 are predicting that we're going to see an increase, while only 257 are predicting a depreciation of home values. And then if you do look at the ones that are predicting a decline, you'll see here that, it's less than 5% of a decline. So, the ones that are predicting a decline, the vast majority are less than 1%, and then, followed up by 1 to 3%, which 3% is not a huge decline. But looking at the forecasters that are predicting appreciation, the vast majority are predicting 1 to 3%, which, would again fall right into that 1.8% or 2% prediction from the first graph. So the next graph here is from the home price expectation survey. So these are the top experts and the top economists. And again, the vast majority are predicting appreciation, not depreciation, which is similar to the metropolitan service area like Zillow. And so this helps give some insight. Not everybody is predicting that we're going to see, a decline in home prices. In fact, the vast majority are predicting that we're going to see appreciation, just more at a modest level. So, obviously, 6 months ago, 7 months ago, home prices were, increasing overnight. Because of the supply and demand. We had a shortage of supply and a huge demand with the low interest rates for the houses that were out there. So for every one house you had out there, you probably had 10 or more buyers. So now, because of the rise on interest rates, we have fewer buyers, and then we do have an increase in inventory. So here's a quote from John Paulson, and he says, we're not at risk of a collapse today in the financial system like we were before. It's true, housing may be a little frothy, so housing prices may come down or they may plateau, but not to the extent it happened before, and he's referring to 2008. And I think this quote really sums things up. When the economic uncertainty dust settles, those buyers and sellers who were on the sidelines will jump back in the housing game. Demographic trends support elevated purchase demand in the years to come. So it's a question of when, not if, for the housing market. So I've been saying, to answer the question that I've been asked over and over again, what's going on with the market? I think once we're through this turbulence, and I think that's a good reference. It's a little bumpy out there right now, but once we're through this turbulence, I really feel that our market is normalizing, and so I don't feel that we're going to see a huge decline. We are going to see, a little bit of an adjustment because we went up substantially there for a while. And so the market's going to adjust due to the higher interest rates. But I think at the end of the day, our market's normalizing, which will keep our market nice and healthy moving forward. And so I'll keep this video pretty short. I'll go over, different graphs on another video that just shows what the prediction is over the next 5 years. that again is not showing a decline in the housing. So I think we're just going to be more at a modest level as far as the appreciation. And then I can do another video that'll also talk about, where rental prices are going and what's going on there. But I really feel that our market is going to be a healthy market moving forward after we get through this turbulence. So I hope that helps clear up some of the confusion out there and helps bring some insight to what's going on. If you like this video, don't forget to smash the like button and subscribe, and I'll see you in the next video.